Hello, welcome back. A time for our business news now, and I'm joined by Matthew Warren. Hello, Matt.
Hi, Louise.
So, more bad news for Spain overnight.
Spain started the week with confirmation that it's back in recession. Yesterday, we had Standard & Poor's downgrading Spain by 2 notches and giving them a negative outlook. That means possibility of more downgrades in the future. They also said that their GDP over the next year is going to decline by 1.5% next year. Not good news for them. We're also waiting for jobless figures out of Spain this morning. They're currently at 23%. And they're not expected to really do much better than that.
OK, better news in the Netherlands, though.
Yes, now in the Netherlands, the Dutch government effectively collapsed on Monday. They had to resign after they couldn't get a budget agreement. But last night, they managed to find a solution. This report from Caterina Vitozzi.
No one knew whether they'd be able to agree next year's budget by Monday's deadline, but they've done it. Dutch Parliament's settled on an EU-demanded austerity programme to bring their public deficit down from 4.6% to within 3% of its GDP by 2013. The country's government collapsed in the process, but lawmakers say they are now committed to stability.
It's very important to show the financial markets commitment of the Netherlands, the government, the parliament, a majority in the parliament, to reach the targets of the Stability and Growth Pact, to reform the economy and to allow for solid government finances.
That commitment should help the Netherlands guard its AAA credit rating. It's one of only 4 Eurozone countries who still have that top credit ranking, and it's important it keeps it. Eurozone countries are guarantors for the European Bailout Fund. That European Financial Stability Facility's own credit rating is mainly based on the creditworthiness of its contributors. The more Eurozone countries are downgraded, the higher the risk that the fund will be too, making it harder to finance bailouts. So it's vital that the Eurozone's strongest economies, like the Netherlands, show they're committed to controlling their debts and prove they've enough financial firepower to guarantee the €440 billion bailout fund.
So, a mix of news from Europe, Matt. What about the markets?
Yes, well, the markets, let's just take a look at the US first. They've all closed, of course, and those markets were all up in positive territory yesterday. Now, over in Asia, it's been an interesting story. The Bank of Japan said it was injecting about $62 billion into the economy. Now, first, the Nikkei went massively up, and now it's dropping right back down again, as we can see there. So, a mixed picture.
OK. Well, German workers agreed to belt tightening on wages for years. Now they're determined to reap the benefits of German growth. Long criticised for accepting too many sacrifices for too long, unions are once again mobilising. All across Germany, the number of strikes are increasing.
Our demand for 6.5% is absolutely justified when we know that Deutsche Telekom pays dividends of 3.5 billion to its shareholders.
They've been staging walkouts for weeks, in Berlin and across the rest of the country. Deutsche Telekom's employees are demanding a pay rise of 6.5%, nothing less. And they're not the only ones. In more and more areas of the country and an increasing number of sectors, workers are mobilising. The metal industry is also stepping up to the plate.
During the crisis, we made no demands because our priority was holding on to our jobs. But after seeing the profits from 2011 and how the order books are full, we want our piece of the pie.
The unions are on a roll. Membership has increased in the metal sector since January. Strengthened by this following, they are now putting their foot down. But for the vast majority of employers, wage increases of 6.5% are simply unrealistic.
We compete with companies from countries which have much more favourable wage structures than ours. So yes, there will be increases, I think a little above the inflation rate, something between 2 and 3%.
A compromise is not in sight, but it is certain that wage increases would have positive effects on domestic demand in Germany and the rest of the Eurozone.
If Germans have more money in their wallets, there will be greater demand for goods from Italy, Spain, and France.
Employees are ready to fight for an increase in purchasing power. Important warning strikes are planned by the metal industry to start on Sunday.
Now, Matt, some worrying news for good-looking guys in Japan.
Yes, so this Japanese economist, he says too few men are getting married, and he suggests Japanese women are looking for men who earn twice as much as they do. How to help poor, ugly guys? Well, he says cut their taxes, increase the taxes on the rich. You'll help more people get married, and you'll also raise a lot more tax money. The people would be on this kind of sliding scale, as we see here, where they'd be, if you're judged very beautiful, you effectively have double the tax rate. So a bit of an incentive there, perhaps not to look after yourself and make the best of yourself. Better to be ugly.
Well, maybe it pays in terms of tax, but I think it's just insulting to Japanese women, no?
Well, who knows? He says that's how they judge things, so that's for him to...
OK, no comments. Right, we've got to go, Matt. Thank you for joining us. Stay tuned. We're back in 2 minutes.